Good afternoon and welcome to the market recap. Still Wednesday, May the 19th. Hopefully, you've had a good trading day. I know there were some pretty decent opportunities, some very interesting things that we were talking about this morning on the market forecast with some overnight inventories that ended up doing some reconciling in the equities. Equities mostly closing lower, but recovering most of what happened in the overnight. FOMC came out today. We had the EIA. So lots of opportunities for us. Yes, what a day. If you were with me for the group coaching today, thanks for joining me. Hopefully you found that helpful and useful. It's always one of my favorite times of the week when I get to sit and chat and talk trading with traders. Just kind of looking at the news and kind of going through some of my Twitter feed as far as what happened with the FOMC meeting this morning, this afternoon, when it finally did release. Just a kind of a mixture of thoughts and ideas from the Fed presidents. The one of the things that is on here is apparently Ford is stopping production of their F-150 because they can't get the chips. That's not good. Just kind of looking through some of the feed's going kind of fast here, but some Fed officials favored taper talk at upcoming meetings. I find that kind of interesting with possible, well, not even possible, with inflation kind of rearing its ugly head. FOMC minutes said they to take some time before substantial progress. The economy remains far from where the FOMC's goals are. Again, another comment about tapering. Just not all that much information. Quartle says it's way premature to say whether the Fed will pursue a digital currency. Wait till you see how that happens. Economy is transitioning to recovery out of pandemic. Expects a lot of volatility over the next few months. I found that to be very interesting as far as other news is concerned. Nothing all that tremendous. Some news outlets are saying the traders are now worried that the Fed isn't being proactive enough. The crypto collapse today. They did some pretty decent recovery of that by the end of the session, but Bitcoin down 30% at one point during the session. A lot of people saying it's kind of pretty routine. Even Elon Musk says he's not selling. So at least we've got Elon on our side. I'm going to go ahead and jump into the charts or actually say hello to everybody this afternoon. We've got Andrew, good to see you. Greg, Jorg, good to see you. Hey, JD, nice job today. JD had a really nice trade today. Greg, GC feels like a head fake to me. Overreaction to Bitcoin. Yeah, we're going to see what it looks like in volume and open interest tomorrow morning. Level 2, hey, how you doing? Tanya, good to see you. I hope the intensive is going well for you. Andrew, digital dollar will be the only way to defend the digital yuan. Just talking about that with some guys in the office, as a matter of fact. Yes, and the dancing bear is here. Tanya mentioning one of John's many heartfelt nicknames. Let's jump in and see what we see in the charts here. Take a look at what we were thinking about this morning and see how things played out for us. In crude oil this morning, there was no gap fill. Opening range was the high of the regular trading hour session. Weekly kickoff low finds resistance once the market kind of resolves down below it. You can see it here on the daily chart. There was only a 1.3 million barrel boost according to the EIA. This is the lowest close in about 3 weeks. Here's the 30-minute. Okay, here's where we were this morning when we were talking about, okay, we've got some overnight shorts in this market. We did open with a slight gap. We left the opening range at the high of the session. The market drove down below the weekly kickoff low of 63.50, took a look below last week's low, just below that, and really found some resistance and some comfort, I guess, just underneath this 63.50 level. It'll be another interesting opportunity. We've got JD's 20-session exponential moving average really just kind of capping off any attempt at any rallies throughout the session today. So another nice job there, JD. E-mini S&Ps. All right. So again, settlement was way up here this morning. Just to be precise, it was 42.80. No, 41.23 was settlement price. Sorry about that. 42.80 is weekly kickoff high. We had a lot of shorts in this market. We talked about the idea that we had opened below a late spike that occurred on what was today is Wednesday. Yesterday was Tuesday. Tuesday's late spike. Opening below it indicates acceptance of lower price. Doesn't mean it has to go in a straight line, that's for sure. We had a lot of overnight shorts in this market. We had some attempt to accept below this weekly kickoff low of 40.70. Those were thwarted. We've got a lot of excess in these 30-minute bars down here. The market turned around, headed back higher. The FOMC minutes came out, knocked everything for a loop, but has us continuing to push towards a gap close or a check back to yesterday's settlement price. We're a little bit late for that. We were unable to close this gap. We still have acceptance of price and value below this late spike. You'd be very interested to see how this market responds to this in the overnight session, as well as where we're going to open tomorrow. Watch the market forecast at 8 o'clock to check that out. The NASDAQ did a much better job of recovering, opening below weekly kickoff low, above last week's low, leaving the opening range at the low of the regular trading hour session, and really just one-time framing higher until, of course, the FOMC minutes came out. We had a little bit of a knee-jerk to the downside, but this market did a much better job of recovering the losses from last night. We've completely reconciled the overnight inventory and taken price back into the range and to the settlement price from yesterday. However, we are still trading inside the late spike from yesterday. Again, it's going to be an important overnight session, and it's important to see where the market takes opens tomorrow. It's going to be, if we open above this late spike, does that mean we're rejecting these prices down here? It very well could be. A lot of this, I think, depends, as usual, on news. What do we have tomorrow as far as economic numbers? We have jobless claims and we have Philly Fed. So employment information and inflation information. Going to be another interesting 7:30 tomorrow and another interesting market forecast. The gold. We had somebody talking about the gold felt like a head fake to him, overreaction to the Bitcoin, so maybe a little bit of a too big of a push to the upside. Very well might be. A heck of a lot of volume came in to this market, and it's still holding upside structure. It'll be fascinating to see what kind of open interest changes we can bring into gold, and if there's any discernible direction as to where that information or that open interest change came in. This is the daily chart. We did take a good hard look above that weekly kickoff high. What knocked it off? Well, we were well on our way to finding acceptance above that weekly kickoff high of 1882. It is the point of control, but it wasn't until the FOMC numbers came out, the FOMC minutes, I should say, came out before the market really started to accelerate back to the downside. It looks like we've got a higher close overall here, but and overall value. It's going to be interesting again to see tomorrow morning whether this market opens back above this important inflection level. We started to build some time and some volume up there, the knee jerk to the downside. Is it going to prove to be a head fake to the upside, Greg? Or are we going to go back up there and see if we can't push this market even higher? It's going to be a cool one tomorrow in gold. It's been a fascinating market for me all week long. Now to the euro. The euro volume and open interest indicated this morning a healthy auction, and we still put in a higher low and a higher high, even with the knee jerk and gyration that occurred after the FOMC minutes came out. The 30-minute chart, we really were opening within range and value. Whenever you see that, you hear me say over and over again, it's best to stay patient. The market forecast this morning, we were on our way into testing the overnight high, but we were unable to even get to it. Okay, so that patience, waiting for an hour for better trade location, would have paid, and in a pretty decent way. Once we put in this high, it was pretty much one-time framing to the downside all the way into the close. This previous week's high may end up being resistance for us tomorrow. Did we end with a late spike to the downside? Looks like it to me. If we come back and, close within the late spike base, which I think the base is all the way to up here or lower, I'm going to be looking for this market to accept price at lower pricing. The 10-year, we are in rollover in the 10-year. There was a pretty decent boost in the, hang on a second, in the yield on the 10-year. So this morning when we were looking at the 10-year, I'm going to go look and see here. It was at 1.65%, up just a little bit. So, a 0.02% move to the upside. You can see it. I can see it here on this chart, and look what happens. The price tanks after the FOMC minutes come out. It's just about the time that the rates hit that bid and started creeping back to the upside. So, do we have a late spike? We do, to some degree. If we open in that late spike or lower, we may be headed towards trouble below last week's low. So some pretty decent opportunities for us today. Again, it's so important to recognize these opportunities, and I think even more important to manage risk into these opportunities. It's always tempting to get into a position just because you think that the market is going to be heading that direction, but is it really in good trade location? Are you managing your risk? Are you trading close to points of invalidation? That's what seems to be so important to the people that I work with and in my own trading as well. And I know JD would certainly agree that if it's not about risk management first, you'd better think about what you're doing. So level 2 had 2 trades, ended in profit, so he's good. We need the dancing bear coin, level 2. Who is this JD you speak of? I only hear of a bear that dances. The dancing bear now, Mr. Shine's Mystery Channel 2024. The dancing bear, Mr. Shine's Mystery Channel. Brad Generous, Green Day, sweet. Green Day. Always like to hear that. As far as this day in history, it all seems to be somewhat of a downer. 1536, Anne Boleyn, the second wife of King Henry VIII, is executed. There's a whole big movie about that. 1967, the Soviets ratify a treaty banning nuclear weapons from outer space. This is all kind of a downer, not seeing too much cool there, but we can always count on something more exciting and with a happier tone than in the what happened in history today. 1945. Pete Townsend of The Who was born. Pete Townsend, one of my faves. Great, great songwriter. In 1960, Alan Freed, if you were around in the 1950s, you'll remember the payola scandal. Alan Freed and 7 others were indicted for accepting $30,650 in payola from 6 record companies. Record companies were paying Alan Freed and others to play their music on the radio. 2 years later, he was convicted and given a suspended sentence and a $300 fine. Hardly seems fair. In 1973, Stevie Wonder went to number 1 on the U.S. singles chart today and with You Are the Sunshine of My Life. 1973, Paul Simon released the single Kodachrome. I always liked that song. Dire Straits released their first major label single, Sultans of Swing, recorded on, get this, 120-pound budget. 120 pounds. That's British music, or British money. And I'm kind of surprised. Hey, there is something about Led Zeppelin. 2010, Sarah de Heaven was named the UK's favorite rock song in a survey by listeners to radio station Absolute Classic Rock. They had 2 others in the top 10, Whole Lotta Love and Rock and Roll from the group's 4th album was number 7. And I think that's going to be enough about the music. And we are rounding the furlong in this week of trading. I'm looking forward to seeing everybody again tomorrow morning on the market forecast. Our good friend Dan the Man Hodgman will be back for you for the market recap tomorrow, and then not on Friday. We don't do recaps on Friday, but at least you'll get to see his smiling face tomorrow at some point. I'll look forward to seeing everybody tomorrow morning for the market forecast. We're really going to take a deep look and see if we can't find some good context and risk management for us. As always, we're going to be talking about patience and getting into some good opportunities. So I hope that you had a good trading day today. Let's have a better trading day tomorrow. Get some rest. Be good to each other. Say a prayer for world peace. Wash your hands, and we'll see you in the morning. Have a great day.